Welcome to our latest market update. The big news: inflation is cooling down. The CPI came in at 2.5%, showing price increases are finally starting to slow. But don't get ahead of yourselves. We're not out of the woods yet. We'll break down the numbers and give you actionable insights to navigate this market. So buckle up, because we're diving into what this inflation report means for your portfolio. The headline inflation number came in at 2.5%. Core inflation, excluding food and energy, is still high at 3.2%. This indicates underlying price pressures, especially in sectors like housing, where costs are still rising. But here's the silver lining. Moderating inflation gives the Fed some breathing room and could mean easing up on aggressive interest rate hikes. Let's talk housing, folks. Shelter costs make up a third of the CPI and are still climbing. Strong housing demand drives up prices, but also creates opportunities for home builders. I've got a stock recommendation for you that's perfectly positioned to capitalize on this trend. We're talking Lennar, ticker symbol LEN, one of the biggest home builders. With housing demand strong, Lennar is well positioned. They manage their supply chain effectively, keeping costs under control. Plus, they adapt to market needs, adjusting their offerings for today's buyers. Bottom line, Lennar is a well-run company with a proven track record. They're in the right place at the right time to benefit from this housing boom. And that's why I'm bullish on LEN. Energy prices are finally coming down, with a 0.8% decline in August. Lower energy prices mean more disposable income for consumers, benefiting the economy and companies in the consumer discretionary sector. I've got a stock recommendation that's perfectly positioned to ride this wave of consumer spending. We're talking Target, ticker symbol TGT, the retail giant. Target offers high-quality products at affordable prices, exactly what consumers want when watching their wallets. They've invested heavily in their online presence and same-day delivery options. With energy prices easing and consumers feeling more optimistic, Target is well positioned for growth. That's why I'm putting a bullseye on TGT. Let's talk about the Federal Reserve. With inflation moderating and the economy stabilizing, traders are betting on a rate cut. The market is pricing in an 85% chance of a 0.25% cut at the Fed's next meeting. The data points in that direction: cooling inflation, a strong job market, and a resilient economy. A rate cut could boost sectors sensitive to interest rates like growth stocks, tech companies and real estate. Lower borrowing costs benefit these sectors, making them attractive for investors. Stay tuned for more insights on how to navigate these potential changes. If you're looking for a company that could benefit from a rate cut, look no further than Apple, ticker symbol AAPL. Apple is a cash-generating machine with a fortress balance sheet and a global brand. They're firing on all cylinders with strong demand for their iPhones, Macs and services. Apple is a master of returning capital to shareholders, buying back stock and paying dividends. Investing in Apple means solid growth prospects and getting paid to own it. Bottom line, Apple is well positioned to benefit from a potential rate cut. And that's why I'm bullish on AAPL. There you have it, folks, the latest inflation numbers and what they mean for your portfolio. Remember, we're not out of the woods yet, but there are still opportunities for informed investors. Stay informed, stay invested, and stay bullish. Thanks for tuning in.